Hello, I'm Ron Hagelman, President of Broadtower Insurance Solutions. Okay, you've decided to do the right thing and help your client protect themselves from the potential emotional and financial devastation that can be caused by an extended need for care. We know that the only rational solution is insurance. The first question should immediately become, how much do they need? The correct answer is, of course, bigger than a bread box and smaller than an elephant. The quest for the correct fit should begin with a more important question. What are your clients trying to accomplish? The easy answer is to replace the entire potential long-term care risk with insurance. But first, let's take a hard look at the actual size of the potential problem. The average annual cost of care in America today is about $85,000 a year, and claims duration about 2 to 3 years. So many consumers are facing a $250,000 claim. First, let's remind ourselves that we're talking about statistical averages, and we're not taking inflation into account. Therefore, in 25 years, a catastrophic claim may be over $1.5 million. The typical long-term care policy sold today is about $4,800 a month of benefit, about a 4-year policy, a 90-day elimination period, 3 or 5% compound inflation, and about a $2,300 annual premium. This coincides nicely with the potential average risk. An equally valid strategy is to provide smaller amounts of insurance that coordinate with other income and asset sources to accomplish the same degree of control when care is required. Unfortunately, there's no easy button when trying to evaluate the best approach. Each situation requires a careful examination of how the client perceives their eventual problem, or more importantly, how you help them understand the real risk and how they want to create a solution. Let's begin by backing up a minute and take a more careful look at exactly what does happen at the time of claim. Half of all claims files are closed in less than a year. 70% are complete in 2 years, and 95% of all claims have run their duration in 5 years. Now let's take a hard look at the potential financial burden. Today, average costs based on duration are approximately $100,000 for a nursing home, $120,000 for assisted living facilities, and $60,000 for home care. Statistical averages never tell the whole story. Catastrophic claims can distort the reality. 3 out of 4 Americans will experience the need for care at some point in their lives, but only about 20% of those will face the financial and emotional firestorm lasting multiple years. The fact is that some long-term care insurance will help most Americans. The question is, how much risk-carrying is your client willing to assume? In conclusion, the entire cost of a lengthy care event may be shared between family members, the insured, and hopefully their insurance protection. The critical question is simply, how much of the risk does the client wish to lay off on their insurance, and how much they wish to pay out of savings in retirement? The basic consideration drives this most important planning conversation. Is this an attempt to replace the risk with insurance as much as possible? Or is it a supplemental coverage strategy that will be added to the client's other assets and income when the time comes to provide sufficient total dollars to guarantee freedom of choice and quality of care when the claim is upon them? Remember, the most important long-term care planning concept is to provide the ability to maintain control of your own claim. Even the smallest policy can make all the difference. For more on how to discuss long-term care and long-term care insurance with prospects and clients, contact your Broadtower Insurance Solutions General Agency.